Why, hello, everybody. Welcome to the January edition, the January 2025 edition of the Broker Online Exchange webinar. We have some very exciting material for you today. We'll get started here in just a few minutes, let some more people pile into the room. All right, well, let's get started here. So this month, we are going to go over a market update. Beginning of the month here, and some exciting stuff happened in January with the market moving, I guess, and we're also gonna, answer your questions. So kind of an ask me anything, ask us anything sort of format here. We've collected a lot of questions. Sorry in advance here, we couldn't get to all of them, but we did take about 11 of them, and then we're also gonna have some rapid fire questions at the end, so this can be kind of fun as well. We're looking forward to this. So again, this is the January 2025. Welcome to 2025. Hope everybody's year is getting off to a great start. And let me, where are we at here? So let me begin, I guess. Can I go to the next slide here? There we go. Little issue here, technical issue. 1 second, please.
It's okay if you're frozen. We're frozen in Dallas too.
You are frozen? Okay. For some reason it's freezing up here. Let me just try to, 1 second here, and let me try to get this back on here. Maybe it's a,
All right.
There we go. All right.
There we go.
There we go. So, sorry about that. Again, my name is Scott Ebley. I'm Director of Pricing and Strategic Solutions here, and with me is Allie Black. And I'm just nailing that last name now. She is the manager of the Pricing and Strategic Solutions team here. So we're going to get started as usual, where Allie is going to, well, first of all, we're going to talk about Box, and then we're going to do a little market update, and then we're going to go into your questions answered. Really good stuff here, really good material today. Please stick around for the whole show. Allie, take it away, and let's go into Box.
Awesome. Thank you, Scott. And good morning, everybody. Thank you so much for sharing your Wednesday morning with us. Just to take a minute to introduce ourselves at the top of the webinar, we want to say that we are Broker Online Exchange. For those of you who aren't familiar with us, we also go by Box. This last year, we were the TIPA, the Energy Professionals Association, ABC, or Aggregator Broker Consultant of the Year. So if you don't know who we are, definitely check out our website, check out the TIPA website, start looking at all of the resources for deregulated energy and retail energy. Going into a little bit of an intro just about Box. Box is your ultimate commercial energy brokering partner. So we provide independent energy brokers and affiliate partners with access to all top electricity and natural gas suppliers, instant pricing, and cutting-edge software, all supported by industry experts. Box has become the largest network of energy agents, brokers, and consulting firms in North America. And now that everybody's voted, we're also the best. So we connect a variety of diverse energy partners, so each can benefit from streamlined, efficient options in deregulated gas and electricity. You can see how you can scale your energy business nationally with our map that we have up here. We have natural gas markets available in green, natural gas and power markets available in blue, and then we've got a healthy portion of the Midwest and the West as well as North Carolina, you'll see that's filled in a little bit of a darker gray color. Those are going to be your large commercial and industrial natural gas markets. So customers in these markets who are on the small customer side, your mom and pop shops, or in individual small businesses, small commercial, like everybody out in Georgia can shop. Not so in these big gray states that we have here. But if you know somebody who is doing some Bitcoin mining, or if you know somebody who's setting up a data center, if you know somebody over in Missouri who has a textile manufacturing operation, something like that, we're happy to take a look at it. We do have suppliers behind utilities in these states who are looking to take on customers. So if you're looking to grow your presence nationally, any of these states, customers can be fair game. So we're happy also anytime, really. It's just as simple as sending a bill copy over to your account manager so they can get it to us. We'll take a look. You should be able to get a response very quickly in terms of, yes, this customer has a great opportunity, or no, unfortunately, this is a regulated area, not a lot we can do. But really, really quick, really easy process. Remember, bill copies are important in those markets. Moving right along and speaking a little bit more to our supplier portfolio, and another big benefit to working with Broker Online Exchange. You'll see a lot of familiar names up here. You'll see Direct Energy and Constellation, Champion Energy Services, Shell, and NG AEP, some of the big guys who own generation, they own some transmission, and they participate in the retail market, got really great backbones. You'll also see some other names on here who may not be quite as familiar, but believe it or not, they also have amazing backbones and are willing to come and compete for your business. I didn't mention Vistra, but Dynegy is up here. Those guys are huge. CPV has great assets behind them as well. That's Competitive Power Ventures. So we use a mix of our big national brands with really great resources, really strong backbones, and smaller suppliers who can be a little bit more flexible, lend us some niche expertise to the markets, play in both power and gas, just depending on the area that you're working in. The last piece we want to hit on, just in terms of the introduction to Broker Online Exchange, is our strategic solutions team. That's the team that brings you this webinar every single month, and we want to go ahead and highlight that we are ready and willing to go above and beyond for any customer that hits the custom pricing desk. We have an awesome machine on the side of on our matrix side of the system, where the transactions are really, really easy. It's so easy to pull quotes. It's so easy to compare prices and look at everybody who's participating in the market. And it's literally one click to where you can start a contract and just get everything going through the system. E-signature, super easy process. Can watch it all through our online portal, all through the online broker portal. But for people who are working larger businesses, for consultants who are looking for a home for some of the book that they have served for 10, 15 years, if their retailer went out of business, or if you're just looking for some more options, that's really where our strategic solutions team comes into play. So that's talking about not only strategic procurement solutions, so looking at strategy, looking at timing, looking at optimizing your cost, looking at reviewing your product, looking at drilling into down at the component level, whether we're going to pass through capacity, we're going to fix it, or we're going to do something a little bit in between. We're going to look at the customer's usage. We're going to help them with any budgeting that they need, regardless of the product type that they're on, using all of the resources that we have available. As we've mentioned on past webinars, and we've gone into this really in depth on some previous months, if you guys are looking for contract analysis and negotiation, looking at fixed doesn't really mean fixed, looking at all of the different treatments that different components can have, the different customers can have, just based on the way that supplier contracts are written, that's something we can help with as well. Any of these RFP management execution for customers in the public space, looking at education customers, healthcare, any government entities, municipalities, co-ops, those types of things. If you need an RFP, that's something that we can help you facilitate, literally from the paperwork that goes out, asking customers opt in, opt out, setting the timeline, and walking hand in hand with the customer to help them execute that strategy. regardless of what your customer is looking for, if you need a deep dive, if you need people who are experts in this space, who really, really love talking about energy and contracts and retailers and deregulation and all of the options that are available, get us on the phone call with these customers. We are happy to do it. We're happy to back you up as part of your team, as part of your consultancy, or we're happy to just speak with them and let them know all of the wonderful things that the Broker Online Exchange and the Strategic Solutions brand has to offer. Either way, we're here to help you. We're here to back you guys up and lend our expertise, our resources, and really make sure that you guys just look like rock stars for your customers, and that you guys are delivering, like we talked about, really just above and beyond what they can get anywhere else. So with that, I'll pass it back to Scott to hit on a little bit of that if I missed anything, and our market update.
Yeah, Allie, I just want to add a couple more things. One is our team also has closed and pretty much contracted, closed, prospected, all that. Fortune 500 companies. Not here at Box. I mean, yes, at Box we have Fortune 500 companies that we work with, but I'm talking about in previous places working at suppliers. We have closed deals. We know how to close deals. We know how to work a strategy on give us the particulars. Understand once we have the particulars and understand what the customer needs, what the current contract are on, if they're with another supplier, with another consultant, we can figure out ways and strategize with you and brainstorm with you and be a partner with you in figuring out ways to win the deal and better ways to win the deal. We are here. We're just an advocate. We're like free advice for you to do that. So that's another service that we provide as well. I've written emails for prospecting emails. I've worked on prospecting campaigns for some of our partners. So we go above and beyond. There's no extra charge. It's the same percentage, that you guys keep in the service fee. There's no difference. We just want to help you guys win deals, provide great service to your customers, and all that. And then the last thing is, I'm going to give this number out here, and I've given it so many times, 237%. 237%. That is the increase in the close rate if you enable us to get on the phone with the customer. That's the difference. 237% increase if you can get us on the phone with the customer. Again, we have been in the room with C-suite people. We understand it. We understand how to conduct a meeting, how to do the consultative process, and be fully engaged. We have had a huge success. There's a lot of our partners, a lot of your peers that we work with that are having great success with this. So please utilize us. We're here for you. Your success means our success. So we're mutually, we have a mutual goal. So with that, let me, Ellie, you'll be back here in a few minutes with the questions. So let's start with the market update here. Market, despite the fact, we're going to go into a slide in this later on. It's one of the questions that I love the question, and I go over it a lot. But again, we're just going to show you here real quick. Despite the fact that you saw all these big market movements and these swings in the front of the month, the backs didn't move all that much. 2026 up 20 cents, 27, 28 pretty flat. Power prices again moved pretty much in line with that. With those prices, so there we are. Again, pretty highly elevated prices compared to where the index prices have been coming in at. But again, we have a lot more load projected to come online in every single one of these hubs, especially ERCOT and PJM with the data center and load growth that's projected out there. With that, now let's just go into ERCOT here. And this is the January, just to let everybody know, that is updating both of these next two charts. That is updated through yesterday. It's yesterday's day ahead prices. We've had a little bit higher prices, some higher prices again today. So this is gonna be a little bit higher in the next couple of days. You got cold weather. That's just kind of building out this load here. But ERCOT, again, last 12 months, $26. I've been doing some studies here. Really in ERCOT, the market, like I think it's around 75–80% of the time, it's below $20 on an hourly basis. These big swings, and with that, but prices have been tempered down. You look at this, we haven't had any big months above $50 since August, July of 23. So we're going on a year and a half now, despite the fact that ERCOT prices are up that high. But we're not really going to see, it's tough when we get these huge swings here because we're having, some really good things going on with batteries and some of the other stuff coming online. But, this load is growing. We'll see if the demand, if supply can keep up with demand. West Hub, we're having a big month here. We're at above close to $70 so far in January. Again, probably another big day today. We'll probably finish out here the month, probably, I would venture to say, probably right around these levels, which is one of the higher winter months we've had in a while. Again, just this cold weather, higher load, it's just going there. We hit 142, 143 gigawatts yesterday, which would be a pretty high day in the summer, probably be in the top 10 days in the summer. We're hitting up these kind of levels here, and with some of the gas freeze off, some of the plants just don't run as well. Some of the, of course, solar's not going as well, and wind is sometimes, kind of freezes up. So some issues there where not as much supply in the winter as the summer. But with that, the 12-month has gone up to 35.70 here, and up about $2 or $3 over the past from the previous month. So with that, let's go now to the gas storage. We're looking at the gas storage here. We're just going to show here the first quarter of the year, so up until the end of the withdrawal season. And this chart here has every year, and 2025 is in bold there in that kind of like purple color here where it kind of stops. And if the forecast here for Thursday and potentially for the next one, we are probably in 2 weeks going to be down here. And look it out, we'll probably be right around here, and which will be kind of really tucked in. Quite a dramatic thing. We're up to the highs here above, and now we got below 3 years, so really probably below the 5-year average at that point. Whenever we get below the 5-year average and start hitting deficits of 5-year average, that's when markets start going above $5 in the cash price. So be cognizant of that. February, we're really, if we have a colder than normal February, we could start seeing the 5-year potentially hitting up to the 5-year low. And if it continues, we're talking probably, really the forecast right now is most likely we're going to have a warmer than normal end of the winter. We'll probably be close to 1.9 to 2 TCF, 1900 to 2000. If we have a normal winter, we'll probably be around 1800, 1850. If we have a below normal winter, we can probably be in this 1500, 1600 category. So that's very dangerous levels considering the fact that we have a ton of LNG that's come online and is coming online. Production really hasn't picked up yet, and that could start making these back years start ripping up higher. Let's go to the next chart, and that's the rig count. Not much here, same thing every month. We're just kind of hanging around this 102, 96 area here. At this big drop, we're at 150, just a reminder about a year and a half ago. So, and this rig count is just kind of stagnant right now, and really probably not at the levels we need to be at for the production that's been coming online in the future. Natural gas production, 102.9 so far in January. We actually did have this around 105, 106 area for a week or so, week and a half at the beginning of the month, but then it kind of, again, little freezing issues with the wells and the drilling, and it kind of brings down the production about 3 or 4 BCF. We expect this to kind of pop back up, probably that 105, 106 level, especially if prices stay where they're at. Probably you'll see that in February. And then U.S. LNG export capacity. This chart hasn't changed. It did change it here. It showed here. That's really, we're looking at here at the end of the years in where this will be at. We're currently at 15.5, probably close to 16 now. We're expecting to finish out the year about 2.5 to 3 higher from here, and this will continue to grow. Everybody knows now Trump has obviously ended the moratorium on build outs, approvals for build outs of new LNG studies are still being built out. So really now we'll start getting a better picture in 28 to 30 to see if anything's there or not. Anything starts getting approved for that. Gas prices are pretty high over in Europe in the $15, $16 area, and pretty high in Asia as well. So this is a money-making market, so very profitable to export LNG. And then finally, the chart of the month. And this one I thought was pretty cool here. This shows who's building nuclear reactors and who has them. Of course, China has 58 right now, and they got 118 being built. Yes, 118 reactors are announced or in pre-construction or construction phase. We're at 7. Doesn't mean all these are going to get built. And yeah, it just shows us one thing to notice here is Japan's not on here. Same with Germany. Germany shut all theirs. Japan pretty much shut all theirs. Japan's actually starting to bring them back on, and I think we'll see the same kind of similar thing going on in Germany as well. But very interesting. Nuclear has had a huge renaissance in the past 12 months for sure. And that's all we have in the market update this month. So now let's go to everyone's questions. Take it away, Ali.
Awesome. So this month we wanted to do kind of a AMA or ask us anything style webinar. We get a lot of questions all the time, both from our team here in person, and then it's one of our it's our pleasure to hop on and talk directly to our partners, our brokers, and really anybody who we think could has some questions. Anybody who we think we can help. So we sent out a form, and some of these are going to be the most common questions that were asked. If you guys missed some, feel free to throw them in the questions. I know that our meeting does have a question feature. We may be able to hit on it, we may not, but either way, hopefully this is useful for you guys. So kicking us off, what are some early markets to focus on in 2025 that allow brokers headroom against the utility? This is a great question to start with, just because I think that the conversation around headroom against the utility has changed substantially over the last decade. We did see a lot of changes in 2022. We saw utility prices get really reactive to markets that saw very, very high price levels due to the spike in natural gas and the geopolitical aspects that were happening at that time. But really since then, PTCs around the country, or prices to compare in markets where the utility provides a default supply service, so not Texas, everywhere else, pricing has been pretty reasonable. And that can make it very difficult for brokers and consultants to pitch a fixed rate that competes against headroom. I would say that it's very rare in this time with market dynamics where they are and where they have been over the last 18 months to compete with a utility rate that's a variable and maybe hedged in advance, maybe a little bit more of a real-time rate, but it's going to be difficult to compete with the utility rate if we're only pricing a fixed all-in rate. Reason being, fixed rates come at a premium. That premium that covers budgetary certainty, that allows your customer to have peace of mind, really allows suppliers, traders to do the same. You know, they're covering risk, and your customer fixing a price allows them that same opportunity to cover risk. So keep in mind that fixed products aren't necessarily the lowest cost products. They may be the best price for the customer. They may be the best performing product for the customer, but they may not be. And we're happy to look at that. The markets where we're seeing the biggest returns for retail in general versus utility rates are in general going to be areas where utility rates are a little bit higher on average. So that's going to be all of your New England markets, particularly in the winter. We see some costs that are in the 15 to 20 cent range over in Connecticut and Massachusetts. We also do have some room in New York. I believe that we are very competitive in New York, specifically with index products, because New York is really more of a real-time market. where their PTCs are mainly run against the real time, but we've been finding some opportunities in New York. And then areas around the mid-Atlantic, again, with some elevated pricing levels out, kind of eastern Pennsylvania, all of New Jersey, those areas. If you get into Maryland and Delaware, have been a little bit tough to serve lately, just because suppliers seem to be more limited there. I think there's probably some infrastructure items out there that are, that are causing some difficulty. But I would focus just early markets for 2025. I'd focus New York, New Jersey, and really all of New England. There should be some good opportunity there.
All right, thank you, Ellen. And the next question, I'll take this one. How much does daily gas pricing and movement affect pricing in the future? There's way too much attention paid to the front of the market, and they see that headline, they see on the CNBC or Bloomberg, gas is up this much. It actually drives me crazy when I see like gas is up, 120% so far this year, and it's like, well, if you can store the gas, yes, but not everybody has that luxury. In fact, very few do. So this is a chart here that I created, and I think it's really important to understand this. So that yellow line there is the spot price of gas. That's the price you'll see on a daily basis, and you'll see this. This is last year. This is all last year, or I think to the middle of December. And it shows you the fluctuations we had in that spot price. In the winter, of course, it got up to 320, and then when winter looked, it goes over, it got down to 160, and then we popped back up to around 320, and then we went down to 190, blah blah. And you see that we ended the year up there around that 380 level, right? But where are people buying their gas and their power? It's most likely in the outer contracts, right, in the front of the month. And you'll see this is the chart here at 25 and 26 calendar year, 25 and 26, where really, if you do it a 2-3 year contract, this is pretty much what you're buying. And look at that range. It did not have the same movement. So what I do, and I have a journal here, and I just kind of write stuff down because I just kind of record kind of where markets are at. I never really record where the front of the market's at. I record a couple things. I record power at a certain points, like right now, for instance, today, I'm recording power where 2026 power is at for a couple regions. I just write down in my journal just so that I'm looking back, I can reflect on it real quick versus looking up charts. And I also record where gas is I look at the contract, I look at winter gas for both 26 and 27 right now. So basically February gas for 26 and February gas for 27. To me, that's really kind of, I'm seeing then where the market's kind of moving at in those outer years. So that is what I would advise people to do. And with that, I would just go to there's a service called Bar Chart. You can just go on there, it's free. There's a free subscription where you can just view it and you can see where that gas price is at. So I'd have much less attention paid on where the front of the gas is, where, for instance, February gas is right now. It's moving all over. It could be up to around 20-30 cents. Well, at the same time, in the back, in 26 and 27 calendar years, the market could be up 2 cents. So much less. So that's what I'd be paying my attention to. All right, so next question, Allie, why don't you take this one away?
Absolutely. Will any new states be opening to deregulated electricity in the coming 5 years? Maybe. We hope so. I have had my fingers crossed about both Missouri and Nevada for probably the last 5-6 years. Every once in a while with those two states, we see some ballot measures. We've seen ballot measures with Nevada pretty recently. And keep in mind that for those states, if you have a very large opportunity, it could be open for natural gas. There's nothing stopping you from talking to those customers, especially very large customers who may use a large amount of power in addition to a large amount of natural gas. In general, though, I mean, a lot of the momentum that we saw around deregulation happened in the late 90s, early 2000s. That said, we may have, just given the political atmosphere right now, we may have a shift a little bit more towards deregulation, and that could be a good thing for all of us. If a new territory were to deregulate. But those are the two that we've heard about, heard rumblings of over the last few years. I also encourage everybody on here to know who their congresspeople are, call their congresspeople, advocate for choice, advocate for power choice, and advocate for retail access for customers. Competition generally creates better pricing levels, and just because a state is deregulated doesn't mean that it can't re-regulate and make it a little bit harder for retailers and brokers and consultants to operate. So I just wanted to put a plug in there. Make sure that you're advocating in states that are deregulated, in addition to states that haven't quite gotten there yet, with those being Missouri and Nevada on the horizon, closest that I've heard. Scott, have you heard about any additional states or territories within states co-ops that are expanding, things like that?
I've heard inklings before of Florida. I don't think that's happening. North Carolina, South Carolina, but again, it's like these bills get proposed and never go anywhere. But I also want to add, there are 2 states that have choice laws, but they cap them at ridiculously low levels of capping, and it's Michigan and California. So anybody on this call is in those states, yeah, contact your state reps, your governors, all those people. Let's get them changed so it opens up to everybody. I find it to be extremely unfair and ridiculous, but those are monster states there that could do it. Michigan, actually, that's where I got my start in really retail electricity. At the time, it was completely wide open. And then of course, the caps came in. But that's what I'd be working on those as well. Those are potentially states. So next question, how much will the change in capacity rates impact overall electricity rates in PJM? And this is, again, easy to show in a picture. Bam, look at that. This is kind of a typical average industrial-ish, commercial, large office building-ish kind of thing where the capacity load factor would be at, typical levels. So average customer here probably be around, the 235 you're paying right now a megawatt hour. It's going to go up to 2193. It is happening. This isn't a law that's going to get reversed by any new administration in the federal government. Any new regulation, this is what it is. This is happening. So in June, everybody's bills are going to go up. We've talked about this many times on calls. This is why capacity pass-through is very important, because everyone's going to get these adjustments, even if they're fixed. It's going to be a surprise to many customers. They probably thought that fixed meant fixed. But this is going to change. And one thing we want to do here is really, really important is to make sure in the contract when it's if you are fixing it in there, to make sure those adjustments are each way, because otherwise most suppliers don't have that in their contract, and you have to ask for it. You have to have transparency. That's why capacity pass-through is the best. It's totally the best, because you pay what you need to pay. And here's why as well, is because right now for the years 26, starting in June of 26 and beyond, we don't know what the capacity price is, and most suppliers are doing the right thing, and they're just saying like, okay, 25, 26 is probably where the capacity is going to be. We'll just figure out the same year capacity and go on. Now, if it goes lower and you fix that price, the suppliers aren't necessarily going to make that price lower. But if it goes higher, they will definitely make that adjustment if you don't have that as a pass-through. As a pass-through, you get it both ways. So why give all that optionality to the supplier? You should have it full on. And number 2 is really important here as well. For anything past, contracts go past June 26. There are suppliers that are not, you're not going to get an apples to apples comparison, because there are some suppliers, say, taking an average of these 5 years here, or an average of the 2 or 3 years, and that's how they're throwing their capacity number. And it's not very clear on that. And of course, then they can make adjustments to that. And you might think like, oh, well, hey, ABC supplier ABC is $3 a megawatt less, but in a sense, they actually could be $8 higher. It's very important. That's again why it's really important to do your work for the customer and find it out. So we'll go to the next question. Ellie, take it away.
How does Box work with suppliers to ensure competitive and reliable pricing for brokers? Well, the first thing to remember, and I don't know that I touched on this at the top, but I do definitely want to say Box is full of people and staffed by people who have been in the industry for a long time. And anybody who works in the energy industry, especially in deregulated energy, knows that it is a very, very small world. There are a lot of people who I met my first year in the industry back in 2011, who I still know and who are still working in the industry today. They may have moved retailers or moved positions, gotten promoted, or done lateral moves, but they're the same individuals, and we still have those relationships. So anybody, a lot of our leadership and a lot of the staff here at Box, keep in mind that we've been in the industry for a while. Much of our executives have also worked at retailers, and so they take that knowledge base, they take those relationships, and they take all of that leverage that they used to use to benefit the supplier in the conversation, really to work hand in hand and benefit the customer. So that's first and foremost, is really just taking all of the experience, the resources, and the expertise that we have and applying it to all of our conversations that we have with our energy suppliers. So for example, if we are dealing with a customer where we're working with a managed product and that customer has fixed, they're on an index, they're passing through capacity and transmission, they've fixed half of their energy, and now they're looking to fix another 25% of it, right? Well, this customer is already contracted with the supplier. The supplier can come back with an energy price that has, 25 cents of margin for the supplier, or $1's worth of margin for the supplier, or $5 of margin worth for the supplier. And again, customer's already contracted, and it's up to the supplier to say, hey, here's the price that you can fix your remainder energy at, or not. But the customer may not, the customer can't necessarily shop at that point. They're already tied into a contract. And so what we'll do is, based on our resources, we have curves, we pay for this information, the same information that suppliers get, so that we can compose our own models. We know where that price should be for that customer, and can estimate it very, very well. So just things like that, where, if we're seeing something that looks funny, if we're seeing a pass through that gets applied to a customer, there was another issue a while ago with a customer that was a very, very small customer. I think their total consumption for the month was like 500 kilowatt hours or something like that. And they got a huge pass through from their retailer that showed up on their utility bill. Their usual bill was like $50 a month, and this pass through was over $1,000. And so we worked with the retailer to get that corrected and refunded. Obviously, it was a mistake. On the front side, we're looking at pricing. We're giving suppliers feedback too, to be a good partner to them, talking about, okay, this is what you guys look like on the 36. This is where maybe you're falling out a little bit, giving them some really solid feedback. And making sure that we're doing our job in terms of articulating to customers, okay, this is what's included in this price versus what's passed through. This is, the way that you'll be billed. This is these are some of the things that may happen over the term of the contract. So really working with our suppliers to ensure that we understand all of the products that we're putting in front of our customers, that we understand all of the component treatments and all of the things that could potentially happen over the time, and just applying our resources, our expertise, and our knowledge base to those conversations is very, very helpful. Every supplier, anybody who's worked in this industry for a while, knows that every supplier likes to put their own spin on their product suite, likes to kind of flavor their proposals and kind of the way that they do business. And it's our job to be able to say, you know what, that's all good. Everybody definitely, our retailers do have things that make them different. in different ways that they can kind of have an edge one over the other. But our job is to sit with the customer on their side of the table and make sure that everybody is transparent, that they're open, that we understand what we're looking at, apples to apples, and that we're articulating all of the differences, risks, and benefits to customers. So understanding, and a lot of our suppliers know that about us. They know that that's the role that we play, and that we're really here to work on behalf of the customer. And so that's also something that hopefully, they make. A lot of our suppliers, it's a joint effort to support our customers. We want to make our consultants and our brokers and their customers' lives easier in turn.
Awesome, thanks, Ellie. And I want to add one more thing to that as well. So yeah, we have these price curves. We make sure that's especially in layered hedging, the subsequent hedges after the first deal, we really make sure any block pricing, any of these things, large deals, we run these through our models to make sure that, what it is. We pretty much can run these models and get to within 50 cents to $1 of where that price should come out from a supplier. So we're able to kind of work them down on that. Secondly, reverse auction, the best way to make sure you're getting the best price is just do a reverse auction, because you're going to get the most competitive price that's out there. If everyone wants to sell you the product, they're going to keep showing the best price until you're going to squeeze every single nickel out of them that way. That is the best way to ensure that you're going to be getting the best pricing from the supplier. So with that, I'll go to the next question here. And it's, how can businesses optimize your energy purchase strategies in volatile markets? A quick answer on this, really, if it's over 3,000 annual megawatt hours, really, kind of a disciplined layered hedge strategy that just goes out 4 or 5 years and you're constantly making purchases. It is proven to be the best way. This is something that we work with a lot of our customers. And the ones that we are Fortune 500 customers, this is what we have. That is the best and proven way. That's what we do. But if you're kind of under that, it's not that much. I think it's really important to try to buy as close to 12 months in advance as possible. That way you get out of the noise of what's going on. And you saw in the chart earlier how the spot price can move pricing. If you wait until December, you could have ended up, at the wrong time, a week or two before a contract was due. You could end up paying way higher just because of the market movement due to the weather. I mean, so the volatility really starts hitting about 2-3 months before that contract hits, especially important to buy before October 15th if you have a January start date. So October 15th the year before, but we really look at it more like before that winter, buy for the next winter. So 12 months in advance. And that's the best way to deal with that. Go ahead, Ellie, next question.
Perfect. What sets Broker Online Exchange apart from other energy broker platforms? This is a great question, and I think just about anything that I touched on with respect to the way that Box works is going to be a little bit different than your standard energy broker platform. First and foremost, I think that our platform, our portal, our service offering, our staff, our resources, our knowledge base, our expertise, and our relationships in the industry are really second to none. Our mission is to help independent energy brokers and affiliates, like I said at the top of the show. And really, we have focused all of our energy, all of our resources into making a great platform for you guys that removes any of the barriers to really high-speed, easy transactions. We can talk, whether we're going to talk about, we can talk about licensing like we did at the top of the show. We're licensed in every market. So if you have only been doing deals in Texas, you want to do deals in New Jersey, New York, that's something that we can help with. We partner with every major energy supplier. So if you only have, 5 of your favorites and you're looking to expand, particularly if you're looking to get into new markets, or if you have only sold power previously and they're looking to make a pivot into doing natural gas as well, get some of that additional money that's on the table, that's something that we can help do. In addition to that, the platform itself is really awesome. I think our platform, our basically our tracking, quoting, pricing, proposals, contracting system is great. You can manage all of your customers via there, and you can also see, I believe that we have some pieces on commissions there as well. I know our commissions team is awesome. They are also very flexible. So looking at just kind of the staff that we have behind us, I think that's honestly that is the biggest piece. And you'll see that with the way that our account managers manage our affiliates and our consultants and our brokers. You'll see that in the way that our staff interacts, and that people on management and in leadership are on phone calls pretty frequently with our brokers and with customers. We are really here to back up the energy broker and to beef up energy broker resources and energy consultant resources. One of the things that I say frequently about why I love working at Box is because Box has a really deep bench. So, it's never an issue for us to take vacation when we need to. It's not something where I'm concerned that, either a supplier or a customer or an affiliate, a partner is going to call us and, not be able to get a hold of somebody at Box. And if there's something urgent that we have to respond to within, the next hour or two, we need to be able, they need to be able to get a hold of somebody. Somebody needs to, get things moving immediately. And the way that Box is able to respond, whether it's a deal that, we haven't closed yet, something that's in flight, or something that is post-transaction and, the customer has something that they need help with mid-contract, I think all of us at Box are really ready and willing to help. And the fact that we have such a large team and that we are basically ready to allocate those resources wherever and whenever we need is really something that I don't know that anybody else has. Other firms have platforms, other firms have systems, other firms have supplier relationships, and maybe they have licensing. But I think that what really truly sets us apart is our team and our people, and the way that we are able to utilize the scope of our knowledge, our resources, and our energy as a team. Scott, anything else that you want to add on that?
You pretty much covered it. Yeah, pretty much covered it. I mean, I think that summarize what you said here. What separates us is our people and our personal touch. And like I said, our team, for instance, we will help you with everything from writing prospecting emails to closing the deal. Talking to the customer, there's really no other kind of group that will go into that and has our depth of knowledge on our entire team. So, and our entire company. So that's where we sell Princess. But I'll go to the next question. We got time here. Okay. What role do emerging technologies like battery storage play in energy markets? Really, where battery storage is really starting to show is that, for instance, ERCOT, we were showing the chart there at the beginning of a market update. Really no LMPs, but in the last year and a half, about $50 for the month. Average LMPs. For battery storage, what they're doing is it's really hitting up where on these peak hours, they're able to just really bring that down, the amount of load. So it's really almost like operating as like a peaker plant that can just be run automatically, and it's there, and is helping smooth out the load in a way, and without as big of a spike, it's able to kind of smooth out those spikes a little bit. So it's really hugely beneficial. It brings down energy costs. It brings down energy costs for everybody. Even if you're not on an hourly rate, what it does is it brings down the forward prices, even if you're buying the forward market. One of the things in So grid emergencies, it really works well. But one of the things though about battery storage is for customers alone, and we can get into the discussions with any customer that's kind of interested. We have partners that work in this field. But for like a customer that's not a huge industrial company that isn't the product fit, and you kind of figure out a strategy to work around using it, it doesn't really work at like a smaller scale as much larger because the cost difference on a larger scale, the cost per megawatt hour to kind of run it really is less. But it still works as a good backup source of energy. Possibly if you can tangle in with a demand response program, which of course Texas is huge. PJM is not, again, demand response. We have partners for that. So, but that's where it works out as well. But it's going to become a more and more and bigger and bigger and bigger and very important thing. One thing that scares me, and I'll put this out there, that I don't feel got enough attention in the news is there was a 3,000 megawatt, 3 gigawatt plant in California, largest in the country, that caught fire over the weekend, and 300 megawatts were destroyed. And in this fire, of course, is a lot of these chemicals from the lithium, all that. It spills in the atmosphere. It's not a good environmental picture. And hopefully lithium is not getting as much attention as it has. Maybe nobody's calling for it, but it's surprising. And if more of these happen, this could cause an issue of whether or not the deployment of these, because there is an environmental factor with that. So, but just want to put that out there. But right now, it's pedals on the gas, and we're growing the heck out of battery storage right now. And then these costs are getting less and less and less, and it's just making it more viable. So, Ellie, I'll take you have the next question, which is the last question, and then we'll go into a couple rapid fire ones and take any of our listener questions out there. All right.
Awesome. What are the key advantages and disadvantages of a pass-through product? Okay, so assuming we're really the key disadvantage is generally lower cost, and key disadvantage is higher risk. Generally, whenever we're talking about a pass-through product, we're talking about passing through energy or some material component like capacity. And really, the question to ask your customer is, if your bill was to double, for a couple months, is that something that would be okay? Is that something that you guys as a company have the backbone, have the liquidity to be able to withstand? If the answer is yes, but that can't happen all the time, then maybe they're a good product for index, because oftentimes index prices have been settling below the futures prices that they may be secured at if a customer hedges. Now, that's not to say that there aren't very good fixed products available. And in general, whenever we're talking to our larger customers, whenever we're talking about managed products, regardless of how liquid that customer is or what assets they have at their disposal, and kind of how strong they are as a company, they likely still want to limit their exposure. And taking a long view is a great way to do that. That way, by the time you're, you really never have to deal with any of the near-term risk that can get really scary and oftentimes gives customers some heartburn whenever it comes to rates. But key advantage is going to be lower cost. I would say most of the time, probably 80–90% of the time, your index price is going to settle lower, or your costs, if you're passing through components like capacity or transmission costs from utilities that are just passed through without markup rather than fixed into a price, may probably have a lower cost associated with it. But the disadvantage is that you're taking on that exposure, and you're really taking it on through the term of the contract. If you have an open position, or if you have a component that isn't fixed into your price, then you're basically leaving yourself open. And if we do have a very high cost day or days, if we have high congestion days, if we have times when capacity settles out higher, or in events where like we have a large capacity increase coming. Any customer who has passed through capacity in PJM and really hasn't seen those increases yet, but they will in June. It's possible to fix those, but really it's all about how comfortable the customer is, with their costs changing month over month. On average, I've found that index prices can produce lower costs, but the disadvantage of leaving that risk out there is substantial. These are very volatile markets, so it's something where really you've got to talk to your customer. You've got to see what they prefer. You've got to see what their goals are for years 1 to 5 and 10 to be able to properly advise on a good strategy for your customer there. And I think that's it. We get to do rapid fire.
Rapid fire questions with, we'll give rapid fire answers to these questions, and then we'll go on. We have a few questions here from our listeners as well, some extra ones. So let's go with this, and you can answer the first one first, and I'll answer it, and then I'll answer the second one first. How about that? Okay.
Okay.
What is one thing you would like to see change in the industry?
I would love to see a planning committee really at the federal level building out additional transmission resources, starting to get better infrastructure. I'd love to see better infrastructure and better tech across. Okay. If I had to pick one though, probably better infrastructure across the country.
Good. I like the answer. And for me, in a retail industry specific, I would love to see that to ban the word fixed unless it truly means fixed. But then again, that's what we all as consultants do. We can help customers understand that, it doesn't. But anyways, I would love to see that. I think it's best for the customers in the end. I think a lot of them, they get this product that says fixed on it. But of course, if you bury it in a contract, fixed does not mean fixed. And I'd love to see that change. Okay, so I'll answer this one next. First, what is one piece of advice you would give to succeed as a broker or consultant? I would say, I would steer away from selling savings because it's not necessarily guaranteed, and really start opening doors with other services as well. Use them. Everybody's trying to prospect with, selling savings and doing other things. I would do more on optimizing their cost. And with that, you can throw in things like demand response, energy efficiency, all these other things. So that's what I would do. And bill audits, contract analysis, just kind of lead with something else.
Definitely great piece. Definitely great advice is leading with something else. The other thing is, my thing is just a really general piece of advice. I think every salesperson has probably heard it, but if not, listen to understand, not to respond. Just listen to your customers, listen to your customers, listen to your customers. 9 times out of 10, and maybe 10 times out of 10, customers will tell you who they are. They'll tell you what they want. They tell you what they're looking for. They tell you, what is going to make them buy. They will tell you, so many useful things about how to pitch to them, how to deliver what they're wanting, what type of solution that they're looking for. Customers will give you all of the answers that you need to close the deal if you listen to understand rather than to respond and stick to your guns and try to do it your way. So listen to understand and collaborate with your customers.
Excellent. Love it. So let me answer this one first. What's an important industry topic that is not getting enough attention?
I think probably the fixed versus fixed conversation would be my thing that isn't getting enough attention. I think in general, customers understand fixed because it's easy to understand, but all of the other products that are out there and the way that this can really benefit, I think gets overlooked. So important industry topic, probably products outside of fixed are not getting their dues in my book.
Good answer. I would say like and not going a lot into more this energy market as a whole this time. I would say a potential LNG glut, and also
point.
It's not, everybody thinks like, let's just keep growing LNG. Everybody's doing it. Like, you know, is there going to be necessarily a market for it? So it's going to be interesting to see how this all unfolds. I'm not saying there's an LNG glut right now, but with all the construction, because not just the US, there's other countries, Qatar and Australia and everybody else opening them up. So we'll see about that. What's the most exciting feature of the reverse auction platform? And I'll answer that first. I would say, and I'm telling you, it's gold. It's the report. The report that comes out in the end is a great deliverable to the customer. And we've talked about it before. You don't necessarily have the customer attend the reverse auction. You can just have it be run as part of the process. We have consultants that run it as a part of the process. They pitch it as part of the process. They run it. Boom, it's over. And they just deliver the report to the customer on the day that their customer is ready to go. And they can see then that, you know, legitimately see that they've got the best price. They squeeze the suppliers down, and that's how it works. So I say the report. Kelly?
I think the most exciting piece is watching it. I mean, I love the report, but I love that we've been able to actually get everybody, you know, it's a virtual way of getting all the right people in the same room. And I love that we have the ability to do that. I think it's, you know, I think it's a really, really helpful part of our process.
And if you had to describe Box's mission in one word, what would it be, Allie?
One word. Probably help or helpful, helping, something along those lines.
Yeah.
You know, we Box doesn't exist without our brokers, without our consultant. You know, we don't sell direct. Our entire mission is helping these individuals, you know, do what they do best. So I think that's the word for me.
Excellent. I would say elevate. And we're here to elevate our brokers to be and consultants to be more successful, and for them to elevate and ultimately to elevate the customer experience in the end. So everybody's getting a much better experience through what we can provide. That's our goal, at least. And then the next question, what's more confusing, explaining demand charges or assembling IKEA furniture?
I think IKEA furniture is more confusing. That's just me.
Yeah, that's me too. I'm in agreement there, Allie. I'm horrible. I think what my problem is I refuse to look at the directions first and try to figure it out myself as if it's a puzzle.
I do that too.
I completely kick myself in the end. Like, why did I just start with directions? And then I'm like, oh, wait, yeah, I don't know. But yeah, I don't know. I think IKEA furniture, it depends on the piece, but oftentimes it is really hard. Then again, we're from the industry, so explaining demand charge is pretty easy, but I could see that being very difficult as well. So lastly, I think then we'll take questions from our listeners. We'll just take a few of these here. What's an RFP? Great question. Yeah, it's a request for proposal. It's just it's a way for, we call them RFPs sometimes, just if they're getting pricing, but also a formal RFP is when there's actually some written material on it and all that. And with that, you know, it's like, you know, for a municipality or a government, they usually have to have these. Sometimes companies have them as well. And we can't really, as a broker, those are usually sent to suppliers, not necessarily brokers, although we have answered them as a consultant before because they're looking for a consultant. If they're looking for a supplier, those are usually sent to suppliers. So a consultant coming in, the price gets squeezed down quite a bit. It's really hard to really justify being in that, although it's a case-by-case basis and all that. But the best way to win an RFP is to be conducting the RFP. and then you get paid your consulting fee by running the RFP. So we have the capabilities to do that. We've done it before. We already have RFPs, templates set up. So yeah, we can set up. So it's request for a proposal. Great question. The next question here, how much will PGM capacity increase affect small commercial matrix rates? I mean, it's already in the rates, but
yeah, anything longer than a 4-month contract to, 12 months, 18 months from now includes, June and beyond of this year. So they're already in it.
Yeah. And if there is a change in the capacity price, a large increase, they will be likely passing through adjustments on that. And then finally, could you clarify the concept for a reverse auction? And again, the concept is just to squeeze down this pricing down another 50 to 75 cents on the last day when they're ready to sign. That's the concept behind it. Now, this doesn't cost any extra. There's an awesome report that comes out of it. If you sell it right and you put it into your sales process, that this is the process you do and that's what you do, it's going to set you apart. It's going to be a difference between what you can do and what another broker, consultant, even definitely a supplier can come in and do. And what wins deals, again, is showing something different. That's how you win customers over. That's how you get their attention, is by showing something different. And this is another thing that it really helps you show something different. And it does bring value to the customer because it will squeeze down those prices a little bit more. We're not talking $5 difference megawatt hour on the last day. That's not going to happen. You should come with really good pricing on the first day. But on that last day, it's just going to squeeze them down a little bit more because I see that competitive nature of everything going on. So, well, that answers the questions and everything else here. So we went over by 5 minutes. Thanks for your patience, guys. Everybody, thanks for listening. We look forward to next month. Again, remind everybody we're here to serve you. This beautiful picture we have, we're going to update this. We see it every month. When it's time, we will. And have a great month, everybody. We'll look forward to having you next month, and let us know anything we can help you with and provide and help you get some more deals in this year. Thanks. Bye.
Thanks, everybody.